Good evening, everyone. Good evening, guys, and welcome to our live weekly market watch, key insights and prediction here at Elevating Forex. How is everyone doing today? Let's bring the energy of this 45 minutes we want to spend together. Let's bring the energy up. So, did you guys have a good weekend? Yes, that's awesome. Let me arrange my screens here as well so I can read your messages. And yep, welcome, guys. So let's give it a couple of minutes until everyone will join and we'll tune. We just send the link out to the channels. Where are you guys watching us from? Friend said hey. Tom said good evening. Regards from Prague, Czech Republic. Awesome. He from Spain. Elias Papadopoulos. Mate, your name said everything. You are from Greece, yeah. Henry from Estonia. Spaceov from Bulgaria. Awesome. Elias is laughing, yes, because I'm Greek Cypriot. That's why I think it's easy to understand the names and surnames coming from Greece and Cyprus. Sophie from Ireland. Wow, that's awesome, guys. Saliha from UK. Mark from Hungary. Amazing. And of course, to everyone that is watching the lives but doesn't want to get bothered to type on the chat, that's okay, guys. I understand you. Mauro Acosta from Lima, Peru. Zakaria from Holland. Awesome. So, guys, I'm really excited to have you here. From Iraq, Sufuya. Welcome. As I said, I'm very excited, myself and the whole team of Elevating Forex, to have you here on this weekly market outlook. So let's just start it, just to ensure that everyone understands and acknowledge this content is used for general information only and is not intended to provide trading or investment advice or any personal recommendation. And please, if you have any question, put them on the chat below and I'll try to answer them as we go. If you have any currency pairs or indices or commodities or cryptocurrencies that you would like to see the analysis today, please put it also on the chat. And feel free to ask any questions you may have. There are no good, bad, right, wrong questions here. We are all one family and I would like to hear everything that what you have to say. All traders, they have something to say, and please feel free to ask anything. So as for myself here with Elevating Forex, allow me to introduce a little bit, especially for people they just see me for first time. So I'm a certified financial technical analyst. I hold certification by the Society of Technical Analysts in the UK and also from the International Federation of Technical Analysts. I hold the certified market technician. I'm in the industry for 12 years now. I specialize in currency trading, and I would like to blend the currency correlation, because when we trade currencies, we trade at the same time two currencies. So we need to understand both currencies move in order to get the correct direction of the market. On a daily basis, I deliver, on a weekly basis, I deliver market analysis for hedge fund, for trading firms, from prop firms and this kind of stuff. I create courses for trading as well as investing. I publish articles in financial magazines, and I host events with traders and authors like Steve Nimson, John Bollinger, Daniele Kalle, and many, many more. So let's go directly and fast to the charts. Now, in trading, guys, let's keep things simple. Trading doesn't need to be complicated, okay? One of the, and especially if you are a beginner trader or you are a struggling trader and you're trying to find a way to trade the market for this long-term approach, beside our signals, our traders we send on a daily basis, please, on our groups, please understand that if you want to try yourself something based on the analysis we do here every Sunday, it's easier to start with some kind of longer time frames, because it's going to help you to take the time you need to understand a little bit the market. So let's start with the euro against the US dollar. Last week, the US dollar was obviously one of the dominant forces in the market. It created these bearish engulfing candles here, and after it created, this bearish engulfing candle here last week, the euro just struggled to decline further. Okay, so if we drop down on the 4-hour time frame, for example, we see that, and I also create some trading plans so you guys can copy and paste all the levels. So don't get, I hope you don't get confused that that I have a little bit of things on the chart. Just let me know if you need some more clarifications. What do you want to understand here, guys? At this point, there were extreme selling orders in the market hitting very aggressively. You see the green candles are pretty much non-existent, or they are so small in their bodies, so small. And the long bearish, the long black candles indicates that it was more selling orders in the market rather than buying orders. Okay, and in this webinar, I will take a few minutes during the webinar to explain you 100% exactly how the market moves based on the market perspective, not based on anything else, like any educational course and anything else beside the markets. Okay, purely because I see traders, they come to me with questions like, and from their questions, they lack understanding of what really are the mechanisms in the market, in the Forex market. So what we see here, there are long bearish candles, and last week the market created this kind of structure here. Now, technically, this market is still in a downtrend. Why? Because we don't see any significant, any higher high from the price. And many traders, they gonna see this move here, for example, and they gonna explain this as a double bottom, all right? And after that, they will try to understand if this is the new high, price decline, and where we buy. Okay, now let's put things in an order. So the market, yes, made this move to the downside. Okay, but after the break of this low here, we didn't see any follow through. But at this point, the market didn't break any structure. Okay, let's say this high here. So at this point here, the market was still in a downtrend. What we would ideally wanted to see is the price, after it touched at this point here on the left, to move away from the level and not to violate the level at this retracement. This is the most important thing to understand if there is a trend development and if there is a healthy trend development, guys. Okay, so at this point here, we can consider as a deep retracement, and it's not, we can take it as a high probability that the market is going to move to the upside from this point. But because we have to develop the patience in trading, if we want a very simple strategy we can use all the time, that it's extremely high probability way to trade all the currency pairs, is we can look at the weekly chart. We can see what is the market structure and what is the price action, and we want to see reversal price action on the weekly chart like the one we have here, and then we go straight to the 4-hour time frame. We're going to drop from the weekly to the 4-hour time frame. Guys, this is a solid strategy. If you are trading for one day, if you are trading for 5 years, this strategy works exceptionally well. Maybe I will create some kind of a video or a content PDF, something, and we can share it on our channels, okay, on the Telegram, because it's crucial, it's important. You need to have a solid strategy when you want to trade yourself, okay? So on the 4-hour time frame though, what I will be waiting from Monday onwards to see the price makes a higher high, and if this is going to be the low, it's going to be the confirmed higher low. So we have 4 points. We want a low, a higher low, we want a high and a higher high. Many times, unfortunately, I see traders, they have the fear of missing out of any trade, and they are rushing the trades. They see the market made like this, for example, double bottom, and they want to buy the double bottom. Guys, try to not buying the double bottoms before you confirm the higher time frame reversal. I will repeat that. Try not to buy the double bottoms unless you confirm the higher time frame reversal, because the double bottom, it's a reversal pattern that has higher probability to work in your favor if it's traded within an existing trend, okay? So it's very important. At this point, I'm not looking directly to do anything. Again, if the price is going to break above this high and it shows that there is a higher high and a higher low, then I will wait for the retracement back to a level of support or Fibonacci somehow to go long on this time frame. Okay, so that's the analysis for the Euro US dollar. Next one, Australian dollar, US dollar. On the weekly chart, again, the price moved lower, as we see, lower highs, lower lows. It came at an area of support. There is a lot of buying orders sitting here. We can see it from this low point here, this low there, rejection, 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 and it keeps on going. So this area here has a significant impact because the accumulation of buying orders showed that the buying orders still entering the market, and it was this rejection based on this weekly candle. So from Monday onward, again on the 4-hour time frame, if the price is going to make this higher high and higher low, yeah, we definitely going to look for some long positions until it will enter into this area of resistance, because there is a 4-hour, as you can see, bearish engulfing and bearish engulfing. This one here, there are 2 4-hour bearish engulfing order blocks that they can cause the price to find resistance and sell off from this point. Okay, now The MACD at the bottom shows positive divergences, which means that this move is not as strong as this move here, the one preceded. This is what the divergences mean. Again, many times I see traders, we sit on the private coaching and they show me trades they take. It was positive divergence or bullish divergence, Theo, and I wanted to buy because the price, it's gonna, the trend will reverse. The divergences, guys, first they change the market phase. They put the market into a corrective phase. And if the price will retrace 100% and it's going to change the market structure, then we're going to have the trend reversal. But first, it put the price in a corrective phase. Okay, so remember that. So again, same with the euro, we wait for this one to occur. I repeat, if the price should upwards enter into this order block, and if the price is going to find some rejection, definitely we're going to look for some short positions as well. On the higher time frame, one of the weakest currencies last week was the Great British Pound, guys. And regardless, some good fundamental news, some positive CPI number, the retail sales and the unemployment rate in the UK really make the pound very weak towards the end of the trading week. So what happened? And it's easy to see it on the 4-hour time frame. The price made these lower highs and lower lows. Now it's sitting at this support. There are also positive divergences on the MACD, which indicates that the last downward move was not as strong as the previous one, or it's a little bit mixed here because of the congestion. Okay, so if we take this move here, A compared to the B, it's a bit weaker, this one. So from Monday onwards, if the price will bounce off and move upwards and enter into this bearish engulfing order block, we might gonna see some reaction. Price action, let's say on the 4-hour, 1-hour time frame, will show if the selling orders will, if the market will create that imbalance between selling and buying orders, and perhaps the price will decline. Okay, if not, and the price surpasses these areas, then it's going to move, of course, to the R1 resistance as it's marked on the chart. And if the price it's going to surpass the R1, then we have this gap to fill, and we have to work with this order block. Okay, remember, this becomes a bit tricky now because there is a huge gap here that hasn't been filled yet, and it's been 3 weeks now. So if the price it's going to start showing signs of strong and solid green candles, be alerted that it can travel all the way to here. Okay, so be prepared for that. I don't know if this is going to happen, but I'm just saying. Next one, the USD JPY. That's again on a 4-hour time frame. The US dollar JPY created an all-time high just below the 155 Japanese yen. And at this point here, the market stopped making higher highs. It's in a consolidation phase. Of course, because the buyers are not pushing the price higher, the MACD printed negative divergences. But again, the market structure of higher highs and higher lows is still in play. The price didn't make a new lower low. It didn't break the low at this point here. Okay, so we have to be alerted in case the price will break above and continue moving upwards. Okay, but if the price will move to the downside and create a low under this 153.5, we definitely can look for some short opportunities up to here, this 4-hour bullish engulfing order block. Okay, it's something I would like you to see on the calendar for the events that they're going to affect the market next week. Pretty much Monday and Tuesday, it's not going to be something that really changes the market directions. On Wednesday, the Australian dollar is expected to kind of experience some weakness in case the consumer price index and the consumer price index based on the yearly number. On some calendars they show it that is about to decline, so we will see what's going to happen with this one here. And if this it's going to follow through by the market, we might going to see a weakness on the Australian dollar. Okay, but guys, the most important and where you have to pay attention, it's going to be on the Japanese yen on Friday, because the Bank of Japan will report their interest rates decision. They are expecting the rates to remain at 0%, which usually unchanged interest rate leads to weakness of the currency. And some other calendars, they show for now the consensus on the CPI is expected to drop. So when the CPI drops, the consumer price index drops, yes, it's good for us, for the consumer, but is not helpful for the currency. So maybe we're going to see some weakness on the Japanese yen. And of course, a weak Japanese yen can help the US dollar to push higher against it. Now, if the price will break above this one, mark the level 155.5 and 156 as the potential areas of taking profits if we're going to start looking for long positions. Okay. And also the Great British Pound JPY is trading within this consolidation here. Okay, guys. And if the price declines further at this support, let's say if it stays here by Friday, that will be awesome, because some reversal candles can help us to place some buying orders. Now, again, something I see many traders, they do very incorrect when they draw their support or resistance. In order to draw any line, guys, can you tell me how many points, okay, do you think we need to use in order to draw any line? Either it's a straight, or it's a line like this, it's a line like that, it's a horizontal, it's a vertical, just to draw. Yeah, most of the people, they say 3, 2, 2, 3. Yeah, the answer to draw any line, Adam, yes, exactly. To draw any line, we need 2 points. We need a point here and a point there or there or there. So if we connect 2 points, guys, we have a line. Okay, if it's this dot here, it's a line from this point A to this point B. Okay, so why when you're trying to trade, you consider, many of the traders, they consider as a support a horizontal line that the price in the recent market touched only once. How do we know that this is going to be the support? And then it comes something else that you guys need to understand. When we draw the weekly low and the weekly high, this is the last price that the market accepted the orders. Once it was moving downwards, and after when it moved upwards. I repeat that again. The weekly high and the weekly low, they are extremely important in the market for 2 reasons. First reason, because we have the weekend and the market is closed during the weekend. So we have the opening and the closing time. Then the second is the last price that the market accepted. Orders, buying orders is the weekly low, and the last price the market accepted, sell orders, it's the weekly high for that week. Okay, so it's important to have these two lines on our chart, but to consider them as support and trade them directly, we need to see some kind of confirmation, let's say on the 4-hour time frame. We want to see a couple of tests on the lower time frame out of these levels. Okay, guys, is that clear? I hope so, because it's really important. And at this point, before we're gonna go to the gold, okay, I would like to explain you in a couple of minutes how the markets move. Now, why I'm in this position, and I'm very serious about that, guys, you need to understand how the market moves, because in all those years in my career, I also used to work in brokers in the dealing rooms, okay, where the prices are made, where the orders they flow, where the orders go out to different, the market is structured internally in a very, very different way. Okay, so the most important thing you need to understand, and please pay attention to that, the market moves based on price and not based on time frames. I repeat that. The market moves based on price levels and not based on time frames. Now, why do we need the time frames and how can we use them in our advantage? It's simple as follows. The time frames, they organize the markets, so it makes it easier for us to get the understanding, okay, of the strong price levels. So, for example, according to this market here, Great British Pound, Japanese yen, the market, it's gonna move based on the orders. And something else, pay attention, again, the markets consist only of buy orders and sell orders. When you start using this kind of terminologies like I'm a buyer, I'm a seller, we are buying here, we are selling here, the only thing you manage to do is to get a different perspective to understand differently how the market structured, because you think that the market consists of people that they are willing to buy and they are willing to sell. Guys, this is electronic trading. We are not on a trading pit where people are shouting left and right, buy 5 contracts, buy 100, 1,000 contracts of this asset. Okay, understand this. In electronic trading, there are only buy and sell orders. I also wrote a nice article, and I can share it with you on the groups so you can read it and understand a little bit. I will do it part by part, so it's simple for you to read it in a couple of minutes, and slowly you understand how really you need to think about the market. So at this point here, we see 2 candles, a bullish candle and a bearish candle. Guys, this is going to be an eye-opening for you, trust me. A bullish candle and a bearish candle, most of the traders, they say buyers and sellers. But the right way to explain this is that at this point here, by the way, guys, are you okay that I'm taking some time away from the markets to explain you this crucial stuff, because trust me, they can flip your trading around and they can help you to become a skillful and profitable traders according to all, of course, all risks involved. So this bullish candle here consists of buying and sell orders. Within this bullish candle, there are buy orders as well as sell orders. Now, Theo, why is green if there are sell orders here? Because the buy orders were significantly more than the sell orders. Therefore, the price ended up moving higher because it was a strong imbalance between these two forces. Okay, there are not buyers nor sellers. It's exclusively buy orders. They placed in the broker's account, in all the broker's account of traders. Some traders, they decide that this level here, if we look on the left, let's say it's 192.4. And some traders, for their reason, they believe that this level here was a good level to buy. Then other traders at this level, 192.41, believe that here the market has to start decline for their reason. So they place sell orders. The outcome after 4 hours, the length of this one, it was that the buying orders overcame the sell orders. So the market moved from this point A to this point B, from this price level to that price level. What happened afterwards is that the market participants decided that, and all the traders decided that they gonna start placing sell orders. And what happens with this bearish engulfing is that all the buying orders, they got flipped by the sell orders and the market moved lower. So this made this level a significant level. Let's say 192.5. Why this is a significant level? Because it was so much trading activity from both orders, from buying orders and sell orders. So the price, once it came back to this area here, it's not coincidental that it experienced again this battle between the buying orders and sell orders. Traders and market participants, they were looking for these areas where there is a lot of interaction to decide, and of course the traders that they have the capital to move the market, to decide where this market has to go. So how can we use the time frames in our advantage? We can flip between time frames and we can identify this kind of bullish and bearish engulfing candles, or the hammer candles and the shooting stars. You always hear me saying bullish engulfing, bearish engulfing, bullish engulfing, bearish engulfing. I primarily trade engulfing candles. Why? Because they show this significant interaction between the buying orders and the sell orders. Okay, so the market consists exclusively from buying and sell orders. And when you read the first paragraph, the couple of paragraphs I will share with you from that article, you will understand why I insist in the buying orders and in the selling orders, not buyers, not sellers. This doesn't exist in electronic trading, guys. Okay, it's gonna flip your mindset and you're gonna see yourself that you're gonna start being very comfortable when you trade, because you won't think that, the buyers are here, the sellers. You will start being very objective when you read the markets from once you get it, okay, once you understand. So we are ready to proceed with the gold US dollar. By the way, guys, in case you want to take your, you want to go fast with some kind of coaching, mentoring, if you need some help, if you need some support, I run again the peak performance package. It consists of 8 sessions, one-on-one with me, okay? How to get in, just message us at Elevating Forex Support on the channel, on the Telegram channel. Now, usually it's $7.99 for the 8 sessions, hourly sessions, but for the Elevating Forex members, we're going to have it only for $4.99, okay? In case, again, you need to get on board, just message us at support, or you can find me on Telegram or the Gears. It's easier to go through the Gears, and he will direct you to me. That's not a problem at all. However, you feel more comfortable, guys, okay? In case you need some help, in case you need some personal support. So, gold, what happened with the gold? Last week, that was very interesting, to be honest. The price, as we expected, let's just hide this for a second. As we expected last week, the market will have entered into a corrective phase. Remember, for those that were on the webinar, we said that this candle here can potentially lead to some price correction, but that didn't happen, and the market stayed within the previous week's high and low, and it created this inside candle, which again, it's even worse. Why? Because it's indecision. When the market makes this inside candle on the weekly, imagine what happens on the 4-hour time frame. Well, the market moves sideways. To capture some good moves on the sideways market, you can use the Bollinger Bands, because you can use the upper and lower band as dynamic support and resistance, okay? But to keep things simple, for me, if I see this kind of market at this point, I had this bearish engulfing order block. I marked there. Stop loss is somewhere here. And I'm still in this trade, to be honest. But my stop loss, it's moved down to there. Let's see what's going to happen from next week onward. If the price will decline or if it's going to move to the upside, let it be. It's another trading, okay? It's another trade setup. So let's see what's going to happen with this one. The market experienced some kind of solid sell orders at this point. So we don't have strong biases of what can happen, to be honest. Any questions? Oh, many questions. So let me answer some of them. Analyze the gold. Okay, we just said the gold. Bitcoin washed out my account. Why? What orders did you place, son? Adam, I want to see if it will increase or decrease today. Look, it's sideways. It's a little bit of a question. Son, I have applied the stop loss power blocker. Was no stop loss something. It's I can't answer that. I'm not the proper person for that one. Someone said I'm completely new, and because of that, do you may have like coaching things about start of the forex trading like beginners that would be helpful? Yes, absolutely, dear friend. Send us a message at support, and I will communicate with you to let you know exactly and everything. How can I help? That will be awesome. Yeah, about the points. We need absolutely great idea. Adam said, so it matters about the volume of how many orders there are. Yes, that's correct. So let's continue with the US oil or WTI. We had good moves there. Remember last week, guys, when I put the order blocks and the zones on the chart, it's for you also to copy them, okay? It's not just for me to trade them. I mean, I give you all the trading setups pretty much every week for these 4-hour time frames. Due to your own intelligence, you can also use them. So last week, the price entered into this order block. I didn't change. It was here actually, and I just move it there because now this is the relevant. It entered here, it moved to the upside. The room of opportunity, it was only up to here. So it was a decent trade. Now, because of the weekly chart, the market seems to make these higher highs and higher lows. That was the 61.8, if you remember, of the FIB retracement. So let's see if the buyers is going to step in. What I want to see really is on the weekly chart, reversal price action, before I go back to the 4-hour chart to initiate long positions here. Next one, as you are aware, on April 20, 2 days ago, the Bitcoin halving occurred around $64,000. That's the point here. The Bitcoin, of course, it's going to start going sideways for a while, and from Monday, I believe from tomorrow, we're going to start see explosive move to the upside. But again, I'm not here to express what I believe or what I think. I'm just doing the proper analysis, like in anything else. Like we analyze and we trade only what do we see, not what do we think. Okay. Something to pay attention on very fast. Let's go on this Euro Canadian dollar. The price looks like it gets rejected from this resistance and also pound cut. So keep that in your trading block for next week. Maybe we can look for some bearish opportunities here. Euro Oz, pound, actually pound Oz, it's more promising because this doji candle rejecting all these resistance areas here, all these orders, and the market decline. Maybe we're going to see some more decline at least until Wednesday, when the Reserve Bank of Australia will report the consumer price index. When the Australian, sorry, not the Reserve Bank of Australia, in Australia they will report the consumer price index. Australian dollar, Canadian dollar, it's at this support here. Last week it was exceptional opportunities on the 4-hour chart. It was one here at this, it wasn't on this one, sorry, it was on the New Zealand Canadian dollar here. On the weekly chart, the price made lower high, lower high, lower low, reversal price action. So on the 4-hour time frame, it was reversal price action. As you can see on the 4-hour time frame, it was this resistance been tested, rejected. So it was a nice 4-to-1 trade on this one. So from now on, we are still looking for short positions, but we need to see the buying orders coming in the market, and afterwards we have to continue shorting. Swiss franc flash every currency actually on Friday, and that's the thing with the Swissy. To be honest, after 2014, it becomes very unpredictable, and that's why many professional traders, including myself, we try to avoid it, let's say, as much as possible because of these sudden fluctuations, to be honest. I'm not saying it's not good to trade, absolutely not, but it's just a little bit, if I have the opportunity not to trade it, I won't trade. Okay, so that's simple as that. So pretty much we're gonna get busy on the majors next week, perhaps on the gold, S&P 500, NASDAQ. They created some nice moves on the 4-hour, lower highs, lower lows, few opportunities that were here on previous week, again, based on this trading strategy and based on this higher time frame analysis. Okay, because on the 15-minute and 5-minute chart, there are much more opportunities to take advantage every single time. Guys, as we stretch it a little bit more, I don't want to overwhelm you with information. Okay, let's do the USD Canadian dollar and the USD Swissy and the Kiwi, and we're going to call it for today, just to cover all the majors. On the New Zealand US dollar, the price is at an area of support. I would like to start looking for long positions, but here it's a great example. I'm not tempted into this double bottom here, bullish divergences. Why? Because the market may gonna create this move, and then it's gonna continue to the downside, right? I want to see the buying orders overcoming the sell orders, price to make a higher high, and I'm happy just to take one trade with a good reward to risk, and that's okay. That's how it's supposed to trade on this 4-hour time frame. Okay, because the trend and the swings, they take more time to develop compared to the 15-minute and hourly time frames, so we can go for, we can be a little bit patient, and we can go for high reward to risk here. Okay, USD Canadian dollar, on the weekly chart, price was continue making higher highs and higher lows. Here is a nice area of resistance, this high here, this high there, this interaction there. Look on the left what happens, and the reversal price action that we want to see on the chart. So what's the actual plan? From Monday onwards, here are the market swings. This low here hasn't been violated yet. The market created a descending triangle on the 4-hour chart, so we expect it to break under that one, retest at some area of resistance, and we're going to look for a reversal price action to go short. Simple as that. Okay, very simple. And that's maybe going to be the trade of the week. Who knows? So we can keep an eye on that one. And last one, the USD Swissy. That's the 4-hour time frame. We have here marked as intense activity because there is a strong interaction between buying orders and selling orders. There is a strong imbalance in the market. And why we are interested into this one particularly is because after this interaction occurred, the price moved, the price declined and created a new market structure to the downside. Okay, this is the reason it makes this significant area. So if the price comes here, experience some kind of rejection, we might want to get to the downside. Okay, but again, Swiss franc, and yeah, it's a little bit so. So guys, I think that's all from me today here at Elevating Forex. I hope you find this you found this webinar valuable. Every single time I host either webinars, live, whatever for you guys, I want to walk away and have the feeling that you got value out of each and every session we do. Okay, I would like at this point to hear some feedback from you guys, but not on this chat, because after we end the webinar, obviously the chat will disappear. If you can send us perhaps some messages at support at Elevating Forex. How do you see the webinars valuable and all this stuff? If you want to see something more, maybe you want us to cover something during the webinar that I don't think it's important for many traders. Yep, I like to hear from you. All traders, they have voice. Okay, regardless, I'm the one that does the blah 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 here on the webinar. All right, guys. Again, myself and the whole team of Elevating Forex would like to say a big thank you to you. And of course, happy trading. From tomorrow onwards, our traders will start with the signals on the channels. And for me, I will see you, of course, all next Sunday again at the same time. Bye, everyone. Good night. Thank you.